Right, let's take a very quick look now to see what's been happening on the oil share. The JSE about 0.5% in the green today, and we had some of those rand weakness and oil price increases having a bit of an effect on the oil share, but over and all, we see 0.5% high. By the way, SASOL, an important player today, that share was up, and we'll give you more details on that in a moment. SAPI, 5% up as well. Let's turn our attention to some of the mining stocks, where we see gold stocks, the big losers on the day, with the likes of Gold Fields down 5%. We also have AngloGold Ashanti down more than 2%. As the stronger dollar comes into effect and the rand weakens. Let's see what the commodity prices did today. Both gold and platinum were down on the day, but that's the big one, the oil price. Now $74.36 a barrel. Of course, this comes as the U.S. said it would end waivers that allow countries to import Iranian oil, and once that happened, we saw the oil price shoot up. Well, let's see what the rand has done. It's about a percentage point in the red against the US dollar. What is that? 14 rand 28 cents against the greenback. Now, analysts point to a strong dollar. That's why you see the rand weakening today. But they also made mention of the fact that there was this weekend news which said Eskom received more money from the government. Investors didn't like that, and that's probably one of the reasons why the local currency is weaker on the day. 14.28 to the dollar, 16 rand 2 cents for a euro, and for a British pound this afternoon, 18 rand 47 cents. Well, I'm joined now via Skype by analyst Chris Gilmore. Chris, thanks indeed for talking to us. The higher oil price, weaker rand, both of those having a mixed impact on the JSE today.
Yes, indeed, Devon. It's interesting, if you look at other emerging market currencies apart from the rand, so you'll see that, for example, the Russian ruble actually did quite well. Not surprising, given that it's an oil-based currency. So not all emerging market currencies are in the same basket. So we're finding the rand is catching all the negatives, I think, the stronger dollar affecting the rand, along with the Turkish lira. So if you look at, to your point about the market itself, stronger rand, not really good for a market. Having said that, it's up a bit. I mean, we're now less than 4% away from the all-time high recorded back in January of last year, almost 18 months ago. So we've certainly been going in the right direction for quite a while now. But there again, you've always got to strip out the impact of NASPERS on the whole market, because that has such an overriding impact on the market. But nevertheless, it's a very welcome sign. We keep on edging upwards a little bit every day. But as you were saying in the preamble, this increased oil price is really not good news for anyone in South Africa. And for the next couple of months, if it keeps on like this, it's going to result in significant pain for the consumer.
Not good news, but if you SASOL, it's a different situation. That share to the best levels in about 6 months now.
Yeah. Again, you've got to bear in mind that SASOL is becoming more and more of a chemicals company and less of an oil company. Notwithstanding that observation, it still gets the benefit of a higher oil price, because that's still where the bulk of its earnings come from. If you go back in time and look at the SASOL share price, it's been an absolute dog for many, many years. It really has not been a great performer. Very volatile stock, as you would expect, being so intimately related to the rand-dollar exchange rate and the oil price. But nevertheless, it has, as you say, it's done well. It's one of the few areas that you can kind of insulate yourself from the impact of a gradually deteriorating rand. So over time, as less and less of the revenue, less and less of the earnings come from oil and more comes from chemicals, I'm thinking of things like polyethylene particularly, that relationship will start to break down. But for the time being, I think got to make hay while the sun shines.
So, Chris, what do you make of gold stocks? I mean, they struggled on the day. It's really been a volatile few weeks for gold stocks. We saw some very good highs in recent weeks, but then again, you see today gold shares down. What's your take on it?
Yeah, again, I think reflecting the stronger dollar. And I think as long as the situation with Iran keeps up, the US, the White House, is effectively strangling the Iranian economy, and provided the oil price deficit can be made up by the likes of Saudi Arabia and the United Arab Emirates, then I think that will tend to keep the dollar relatively strong, and the rand relatively weak. Now, if you take that at face value, that should be good for for gold stocks. But in fact, you've got to also look at the relationship between gold, the metal, and the dollar. So when the dollar is strong, the gold metal tends to be a bit on the weak side. So what you really want, the first prize is to have a high dollar gold price and a deteriorating or depreciating rand. And unfortunately, what we've got is only half of that equation. We've got a depreciating rand, but we don't have the high dollar gold price. So unless and until that happens, and gold was doing reasonably well until a day or two ago, and I think that was what we saw with the gold stocks. They were going quite nicely, but now, unfortunately, I think they're probably going to take a bit of a breather for the next few days, next few weeks, while we see what happens with the dollar.
And then finally, on that dollar, Chris, you mentioned earlier as well that the stronger dollar had some impact on the weakness of the rand that we saw recently. But how much of this rand weakness is due to the news we heard over the weekend, this new loan that Eskom got from government?
I think probably very little. At the end of the day, these emerging market currencies, as I said right at the very beginning, are really moved by what goes on with the big picture. So things like the oil price, the dollar, this type of thing. And, we've been very lucky, believe it or not, with having Cyril Ramaphosa at the helm for the past 18 months, because up until then, we really did an awful lot of scoring own goals under the Zuma administration. And since Ramaphosa has taken over, there's been very little evidence of that. So in other words, what I'm saying is that we're moving largely in tandem with other emerging markets. So isolated instances that you mentioned, the likes of the Eskom loan, I'm not so sure that has any material impact, to be perfectly honest with you.
And then just very quickly, Chris, I mean, you're up there in the Northern Hemisphere. I mean, I don't want to guess what you're drinking up there, but whether it's Coca-Cola or not, I see better results up, the share price is up. Of course, this whole thing about its move towards sugar-free items, just staying and putting more of those on the shelf, that had to have been a big help.
That certainly helps, but if you look at those numbers, revenue up, about 5%, an awful lot of that came in terms of preemptive stockpiling in the UK particularly, ahead of Brexit. Because don't forget that something like 2/3 of Coke's revenues and earnings come from outside of the continental US. So the UK is a critically important part of the US, and a lot of the concentrate, things like that, comes from Europe. So in the event of a Brexit, a crashing out, that type of thing, then Coke really had to insulate itself. In the event we didn't have Brexit at the end of March, we're not entirely sure what's going to happen as far as that's concerned. But I think that stockpiling, that is calculated, that's estimated to have had an impact of roughly 2% of that 5%. So that's really material. Over and above that, millennials have not necessarily been the detrimental factor to Coke that a lot of people thought they would be. These are people who go for the kind of artisanal products, craft beers, this type of thing, and tend to eschew these rather garish type of consumer stocks like Coke and whatever. The big branded products like Coke, Procter & Gamble, Nestle have been making a bit of a resurgence if you look at the most recent earnings updates. And I think Coke is just riding the wave of that as well, over and above the one-off factor associated with Brexit.
Oh, that's very interesting indeed. Thanks very much, analyst Chris Gilmore there.